Good day and welcome to the CCL Products India Limited Q2FY25 earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Navalgund from Nirmal Bang Equities. Thank you and over to you, sir.
Thank you, Dale. Hello, everyone. On behalf of Nirmal Bang Institutional Equities, I welcome all the participants to CCL Products India Limited 2Q FY25 earnings conference call. The management is represented by Mr. Challa Srisham, Managing Director, Mr. Praveen Jaipuria, CEO, Mr. B. Mohan Krishna, Executive Director, Mr. V. Lakshminarayana, CFO, and Ms. Sridevi Dasari, Company Secretary. Without further ado, I would like to hand over the call to Praveen sir for his opening comments, post which we'll open the floor for Q&A. Thank you and over to you, sir.
Thank you, Abhishek, and thank you for arranging this call. I welcome you all to this conference call and wishing you all very happy festivities. Now I will quickly read out our results and then post which we can open the floor for questions. So the group has achieved a turnover of rupees 738.2 crores for the second quarter of 24-25 as compared to 607.57 crores for the same corresponding quarter last year, which is almost a 21.5% increase. And the net profit stands at rupees 73.95 crores as against rupees 60.86 crores for the same period last year, which is again almost a 21.5% increase. The EBITDA is at 137.6 crores, almost a 24.3% increase over last year's same period. And the profit before tax is 87.3 crores. As far as the half-yearly figure goes, the group has achieved a turnover of 1,511.49 crores for the full half as compared to 1,262.5 crores for the corresponding half, which is almost 20% growth. And the net profit stands at 145.4 crores as against 121 crores for the corresponding half of previous year, which is almost again a 19.6% growth. And the EBITDA is at 269.2 crores, almost a 24% growth, and profit before tax is 174.49 crores. The domestic business also showed strong growth momentum, and it achieved a gross turnover of 200 crores in the first half, almost 105 crores in the quarter two, out of which the branded sales in the first half was 135 crores and almost 70 crores in quarter two. So that's a brief of our performance for quarter two and H1. I now invite you all for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jinesh Karia from Antique Stock Broking. Please go ahead.
Yes, thank you for the opportunity. So firstly, if you can just help us with the capacity utilization for the quarter and volume growth, that would be great.
So, without going into very details of volume, which is what that we not share, but if you back calculate, we always have maintained that the volume growths are generally in line with the operational profit growth, which is the EBITDA growth. However, if I were to give you a little color on this, the volume growths, the EBITDA growth is largely due to volume and some bit of better margin business that we did. So the volume growth this time has been closer to high single digit or closer to 10% or so. and the EBITDA growth, if you see, it is closer to 21-22%. So that's the thing. In terms of capacity utilization, it remains very similar to last quarter. We are almost the already set capacity, which was already there. We are almost utilizing 100%. The new capacity probably is at lows of, let's say, the SMD capacity in India would be closer to 10 to 12% utilization. The extended capacity that we had put in Vietnam, the line 2, which made it to 30,000, that will be closer to around the new line. The earlier line is in full capacity. The new line could be at around 40% to 50% utilization. So that's on the utilization and the volume growths and the EBITDA growths.
Sure. And what is the target for the full year? Like 10% was the growth for this year in terms of volume, 16% was in the last quarter. So for full year, what is the kind of volume growth we are expecting?
So considering we have told you that last couple of quarters or last 3-4 quarters, considering that there is so much of volatility in green coffee prices, the contracts have been very, very short term. So we are maintaining that guidance of 10 to 20%. We don't want to change that at this point of time, and that's how the trajectory looks like for the balance of the year.
So next is on the capex. So Vietnam FDC line. When do we expect it to commercialize, and any future capex plans for India or on the FDC side in FY26?
So no capex plan. We are already good on capacity for the next 3-4 years. It's only after that we will figure out whether we need more capacity expansion. So no new capexes. The Vietnam FD, we are right now in the trial phases. As you know, whenever we put up a line, a lot of trials, certification, blend matching, all that work happens. So hopefully we are looking to kind of do all of that, complete all of that by this quarter, and subsequently we can look forward to commercialize and start selling from that unit.
Sure. So just one bookkeeping question. So the India line had commercialized in FY24 fourth quarter, right?
Right.
And it was around 400 crores of capex.
Right.
So why is the capital work in progress as on second half at around 730 crores? If the Vietnam capex, pending capex is only $50 million, then why is the capital work in progress so high as on second half?
No, it is the total. It is around 400 to 300 and 400 crores in India and almost around 375 crores in Vietnam. It is total around 775 crores. So against which some of the equipment, back-end equipment, which are not essential to us, and also some of the admin block and all those expenditure is still going on, which are not really relevant to the operations. Production operations is still going on. That is the reason why you could see that around 750 crores is the CWIP that we are seeing it.
So 400 crores pertains to India, but India we have already commercialized, so it should have got capitalized by now. If you could just reiterate, I didn't get why is it the 400 crores still in CWIP if the plant is commercialized?
No, because if you see that when it is in trial operations, we can't capitalize. Once we are done with that, trial operations are done, and when we move on to about to declare the commercial operation date, that is the time that we go for capitalization.
Okay, so by end of FY25, can we expect, by end of FY26, can we expect a 2,600 crores of gross block? Is that understanding correct?
Yes, you are right. It will be there. 800 crores gross block is going to be increased at the consolidated level.
Sure, perfect. I just push in one last question. If you can just share your outlook on coffee prices, how is it moving? How do we expect it to go in the next 6 months? And that would be the last question from my end. Thank you.
So, coffee prices, again, as we have been telling for last couple of quarters, it's become very difficult to predict because most of the predictions per se have been not holding true. But our sense is that, you would have seen last couple of months there has been some softening across, and the Vietnam crop is slated to arrive in December. So only after that arrives, we'll get a little sense that what are the table levels that it will settle at. So we'll be able to give a better picture. But looks like that, it may not increase much from here. Probably it will either stay at this level or soften up a little bit and stay there for some time till we start getting both, good crops from Brazil and Vietnam, where it could then again soften up. But right now, it looks like it will hold up at these levels for some time.
Sure, that's helpful. Do you expect when it softens, it goes back to 2,000, 2,500 levels, or by softening you mean $3,000, $3,500 levels?
No, so now, right now, none of them. So right now, when I'm talking about softening, we're saying that from 4,500 or 4,400, maybe at around 4,000 levels, it could, or 3,800 levels, it could soften up. 2,000 levels, I don't see it, settling at that price anytime in near future or mid future. It's only, maybe in long term, if there is some oversupplies and all that, it may come down. Unlikely that it goes down to that levels.
Perfect. Thank you so much, sir, and all the best for the future.
Thank you.
Thank you. The next question is from the line of Akul Brokawala from Avendus Investment Managers. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, just wanted your thoughts around, the volume growth that you are kind of witnessing. First of all, is it, driven by spot orders, or are you actually seeing some sort of build-up in the order book, over and about 3-4 months? Is that the case that's happening?
Yeah, so in fact, most of our, if you were to see our profile generally from the past, most of our things are long-term contracts, or lot of our this thing was the execution in these quarters, last couple of quarters has been result of the earlier long-term contracts that we have been getting. Yes, there is a mix of spot orders, but a lot of transactional, or let's say opportunistic sales is something that we have purposefully not been concentrating much on, considering the fact that there is a strong amount of competitiveness that is getting built around. There are a lot of Brazilian players who are offering coffee because the Brazilian crop was good. They have had the advantage when it comes to these opportunistic buys and the bottom of the pyramid sales. So that's something that we have purposefully not concentrated and not got into that price war or so, and that's the reason the volume growths are a little lesser than what it used to be 4-5 quarters ago. But at the same time, because we are concentrating on better margin business and more brand owners and more small packs, our more margin profiles seem to have improved, and that is the reason why we've got such good EBITDA results. So that's the situation right now. After December, when the prices settle down a bit, there are a little bit of forward indication that how the prices settle down, and then that's the time we probably will be getting a lot of long-term contracts. That is our expectation as of now. We'll be able to give you more firm confirmations maybe in the next quarter that how did prices pan out, and how did we pan out in terms of our ability to get more long-term contracts. But yeah, as of now, the market does remain volatile. There are ups and downs, which is making people also wait and watch more. But come to think of it, we have been able to kind of be pretty good on both top line and bottom line, considering that in most of the calls you would have heard us saying that a large chunk of our business is with our established client, long-term partners. Although they may be giving us short-term contracts, but these are people who have been with us for a long time. So that story continues, and that narrative continues.
Understood. And for the new capacities that we have, what sort of plan are we kind of targeting? Are we approaching new geographies, new set of customers, or basically are we just trying to again look back into our existing set of customers and probably gain further wallet share? So some understanding around the new capacities that we have, how we are planning to tie those capacities over the next 2-3 years.
Yeah, so we are actually doing both of it. One is with our existing customers. We are looking at entering into more long-term contracts. How can we make sure, because last time also people have also learned a lesson, because the coffee prices have been rising, they haven't come down. A lot of people lost out because they didn't go for long-term contracts. So this time we are telling them that the situation probably once they see a little stability, they should go for long-term contracts. So we are also helping them get that confidence. So hopefully we'll be getting a lot more long-term and large volume contracts in the future. Having said so, we are also very aggressively looking at new markets. We had already indicated that we are targeting new geographies like China and all that. Our efforts, are continuing in that direction. And we have already started seeing green shoots emerging. Some volumes have started coming in. And we are hopeful to build those volumes going forward. So the capacity utilization will be a combination of both the factors, driving the existing customers and building new customers and geographies as well.
Got it. And just final bit from my side. So as you were mentioning that there has been some competition from Brazil as well. So given that Robusta coffee prices have been at this level for a while now, do you expect that there is some sort of down trading happening with Arabica as well because of such kind of pricing scenario that's there?
There could be, there are, because what happens is that, let's not use this word down trading because generally Arabica was up trading all the time. But, considering that the prices of both of them have kind of shot up, and generally, for short periods of time, you could see a little bit of an up and down in relation to each other. But what happens is that over a period of time, both of them, or the table increases for both of them because there is a certain amount of replaceability that does come in. So while there could be a lag, the table for both of them moves in a similar direction. So there may not be a down trading, but yeah, the thing is that sometimes geographically when you see, 2 years ago when Vietnam was very competitive against Brazil, there were shifts towards that kind of a crop, and vice versa could have happened and has happened to an extent when now Brazilian crop is much more competitive. So these cyclical things do keep on happening. We are as a business geared up for all of that, considering, and we have told you this before as well. We also have ability to buy from any geography that we can. Just that there is a little bit of a lag in logistics that could be there. But considering our freedom to buy from wherever we are pretty confident to keep driving good results in the future also.
Great. That's it from my side. Thank you and wish you all the best.
Thank you.
Thank you. The next question is from the line of Rakesh from Nine Rivers Capital. Please go ahead.
Hi, sir. Am I audible?
Yeah, you're audible.
Hi, sir. Thank you very much for the opportunity. So first question with respect to the growth in EBITDA. So this quarter, growth in EBITDA is 24% over the last quarter, same time. And you alluded the volume growth was around 10 to 11% in this quarter. So the remaining growth has come due to operating leverage?
So as I told in my, as an answer to one of the earlier questions, we have concentrated more on, more profitable clients, the clients who are brand owners, clients who are more looking for, better coffee blends and things like that. So it is more of, shift towards more of, these better coffee, or let's say high margin coffee rather than anything else. Considering that, some of the other geographies have become more competitive, we purposefully were not too keen to take the low margin contracts because, over a long period of time, it erodes margin for us if we were to downgrade the prices. So that's something we always have maintained that 20%, 25% of our volumes at all the time are, opportunistic volumes where traders and these coffee buyers are buying who are looking for, the low margin, low value coffee. So that is the reason why you see or why you have seen a good margin improvement or margin profile improvement this quarter.
Thanks for that answer. Sir, with respect to the debt, we have a gross debt of 1974 crore. Can you bifurcate debt for the working capital and for the capex?
1,300 crore will be around the working capital and the balance will be capex.
Okay. Okay. And sir, last question from my side. With respect to the global coffee prices, there are a couple of publications have come up with the articles or the thesis on the coffee prices. They are alluding the coffee prices are not going to come down for at least next to 1 to 2 years because of the global economic, because of the environmental changes happening. The crop production has come down in Brazil as well as in Vietnam. That has led, and in Vietnam also, few farmers have shifted from coffee to other fruits which are more profitable. So your thoughts on that? Do you believe? I know you alluded in your previous answer that the coffee prices are not going to go up. Do you think the coffee prices are going to come down in the next 1 year, or it will remain here only?
So, considering the interest around this commodity from various quarters, there are a lot of news that keeps coming. So, I don't particularly agree. Yes, 3 years ago, probably Brazil did experience a little bit of a contraction in their output. But last year, we have seen very good output coming from Brazil. Even the next year indications are good because the flowering has been good. There has been indication that probably Vietnam crop could be affected. But really, it's difficult to gauge the on-ground situation because multiple kinds of news that comes in. It's only when the crops comes in, the flow of the crop comes in the market, one is able to gauge the situation. But considering that, what has happened is that everything boils down to the end consumption. Yeah. So most of the times, if you see most of the commodity play, when the prices go up very high, the consumption tends to get affected, and therefore it leads to a cyclical drop as well. Yeah, we have seen it in other commodities like edible oils or pulses. When you see very high prices, there is a consumption impact, and then what happens is that in the next cycle it also comes down. But interestingly, it's good news and bad news because the coffee consumption at the end consumer, we haven't seen much of an impact globally. So globally, we all know that this category is pretty sticky. So what it means is that there has been no consumption drop, and everything therefore boils down to mostly supply. And if the supply is affected, then we see these changes. So yes, for the next 1 year or so, I don't personally see much of a reduction. I see that the coffee prices could hold at the levels that they are at, maybe a couple of $100 here or there. But yeah, the key thing for us is that as long as there is stability, we feel more comfortable because then the customers are also a little less anxious and they are ready to give more long-term contracts. So that's my view as of now.
Thanks for that great, the detailed answer. One last question, if I may. So, with respect to the B2C business that has contributed coffee, we have seen company has done lots of branding promotion in the Hyderabad market, sponsoring few malls or the opening new kiosks in the Hyderabad market. So I just wanted to understand what is the kind of advertising we are doing for this business and how's the profitability in going on this business? EBITDA and PAT, if you can talk about how's the profitability shaping out in this business?
Yeah. So first and foremost, yes, you are seeing a lot of visibility for the brand, and just not for the Hyderabad market. We're also doing a lot in other markets as well, and we're now, as the season approaches, we'll do a lot of activity in non-South market as well. So we are continuing to drive the brand because the brand is in a growth momentum. You have seen the results of all other companies. Most of them have seen muted, results, but amidst that, our growth momentum continues to be very good. We're almost value-wise close to 50% growth has happened in the first half itself, which is a very good momentum that we are in. And therefore, we want to keep investing back into the brand so that the brand can achieve a sizable chunk of the branded business of category of coffee in India. So that's been our plan. While the profitability continues to improve, we probably last year ended with around 5-6% EBITDA margin, which also will improve this year. But the guiding principle has been that we will keep investing back into the brand as much as possible. Right now, we don't want to milk it, considering the momentum that it is into.
Okay, sir. Thank you very much, and best wishes. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your questions to two per participant. The next question is from the line of Yash from Stallion Asset. Please go ahead.
Hi, thank you for the opportunity. So I'm just a bit new to your company. So I wanted to understand that is there a large margin differential between short-term contracts and long-term contracts?
I don't think so. That's the way to define it, because the better way to define is that there could be margin difference in the type of coffee and the value additions that we do. So, for example, a bulk base spray dried coffee could be lowest in the ladder. But let's say if I were to pack this coffee in a small pack, then I could be earning 20-30% more margin onto it. Suppose this spray dried becomes aglo, then I may add another 4-5% I can get margin. Similarly, if it is freeze dried, we all know freeze dried anywhere earns anything between 30 to 50% margin higher than the spray dried. So it's a lot of factors, determine this thing. There are times when even in a short-term contracts, we end up earning good margins because people are in desperate need of coffee. But the other way around is also true, because short-term contracts a lot of times are opportunistic contracts. People are looking for quick, buys and opportunistic buys, and whoever gives them very good rates, they probably end up buying from them. So it's a combination of, I don't think so a generic rule could apply here. But a more generic rule, as I told you, is the type of coffee and the value additions that we are able to get or give determines the margin profile of ours.
Right. So, I mean, one of the things that just from a market perspective is that, a lot of the consumer-facing, consumer-oriented businesses, normally they trade at very high valuation multiples. And one of the issues with our business is that, the ROCs has been average about 15% for the past few years, right? And if margin is not the lever to improve ROC, the only lever you will have is your asset turns. So is there, just from a management perspective, are there any sort of levers that you have to improve the ROCs going ahead?
Yeah. So, if you were to track our ROCs for a longish period of time, you'll see patterns emerging whenever we end up, doing capacity expansion, which wherein we deploy a good amount of capexes. You'll see that during those cycles, the ROCs come down, and they probably peak when we are closer to higher capacity utilization. So that's the cycle, and considering that we are a B2B company, the nature of our business is to supply coffee to the end clients. It will always mean that we probably will be a little more capex heavy during cycles. So that is the trend that is going to continue. But having said so, that's our business model, and that's how we have built our business. But the good thing about the business, the B2B business, is that unlike some of the other B2B businesses, this is pretty sticky in nature. It's quite close, although, valuation-wise and in terms of perception, we probably get clubbed with B2B companies and their kind of multiples and all. But if you see our, the client profile, the way we have built, although we are a B2B company, we have been instrumental in building blends and brands for the clients. And therefore, what it means is that it's just not supplying coffee, but we are long-term partners to them. We have people who have been sticking with us for last 30 years or so. So there is a relatively high sense of stickiness that is there in spite of us into B2B. Having said so, we also do realize that, when you have your own brands, they give you larger or a higher terminal value for your business, which means that you get much better multiples. And keeping all of that in mind, we also have started building our own B2C vertical. Right now, it looks small when you compare it with our B2B business. But come to think of it, in good 5-6 years' time, last year we branded the business at 200 crores, and this year we probably will be closing at around 300 crores, which is a very significant build-up for a B2C segment, because even, most of the fancy, we don't talk about this too much, but most of the fancy B2C companies who kind of, talk a lot about themselves also are not able to scale the kind of way we have done it. And going forward, we are looking to build this up further. We are investing back. We are very now confident that we will be able to build the B2C vertical aggressively. And progressively going forward, we'll see that we'll build a block which will be much higher terminal value and the brand multiples that you can get on a brand. So, that's our thought from our end. It's not that we want to replace one set of things with others, but the fact is that, yes, we have very strong B2B verticals. We have built a very strong business, very sticky clientele, and at the same time, we are building a lot on the retail part, on the B2C side, and this will help us realize much better potential going forward.
Sure. Got it. Thank you.
Thank you. The next question is from the line of Kunal Ochiramani from Kitara Capital. Please go ahead.
So there was in early September, 2 months back, there was a typhoon in Vietnam and some drought-like situations in Brazil. So I just had a question on supply side. If there are so many global challenges, how does this help CCL, and to what extent, and how prolonged this benefit was obtained by CCL?
There will be global challenges. They're not going to go away, and the climatic changes are here to stay. We all know, and it is just not coffee. We have seen that there has been cyclical disruptions in most of the commodities. Coffee is is not insulated from these. So there will be news that there will be droughts, there will be cyclones, there will be frost, there will be El Nino effect. All that is there, and that's the reason we have seen such spiraling high prices in coffee and that's volatile prices that have creeped in. So that's something that is here to stay. As far as CCL is concerned, we do our business model is such that we do cost plus pricing, so it really doesn't affect our margins or our business as long as the consumption is good. And I told in as an answer to one of the questions that the good news is that we haven't seen much of an impact in consumption. So the consumption remains intact. People are still drinking coffee, and that means that there will be demand of coffee. Yes, these fluctuations create a little bit of an anxiety in the market, a little bit of tentativeness in the market from the buyers, because nobody wants to lose after buying at high prices. So therefore, what we have said is that in times of these, what happens is that there is a little bit of tentativeness that builds on our side also, because the customers are not willing to commit for long term. But come to think of it, we have seen these cycles many number of times. We have seen recession, we have seen war, COVID, and if you see our performance, they have all been, during these trying times also. We have been able to manage all of this very well. The day we see some impact in consumption pattern, that's the time when we will be a little worried. But as of now, we're not too worried on that front in terms of fluctuating prices.
My question was, do we benefit? So I guess
we don't benefit. We don't benefit because we do cost plus pricing. So we don't benefit of any, because we don't do speculative buying. So we don't do benefit. The day we take an order, we buy the coffee. So whether it is at a high price or a low price, we really don't benefit out of this.
But does it benefit in terms of volume, if not the price?
Volume is the result of a little more stability in the coffee prices. So volumes will come as long as there is stability in the market. The volumes will come. Yes, we sometimes benefit because we are situated in India and in Vietnam. Let's say if the Indian Vietnamese coffee price or the Indonesian coffee prices are much more competitive than let's say a Brazilian coffee, then what would happen is that we would end up benefiting. Last 2 years ago, when the cost situation had come in Brazil and the Brazil coffee prices are higher, then we did benefit at that point of time, and that's the reason that point of time we were very close to 20% volume growth, and we continued that for many quarters. So yes, in that sense we benefit, but largely, at an overall level, at a long-term perspective, we really don't benefit or not benefit because of these fluctuating prices.
Understood. Thank you so much.
Thank you. The next question is from the line of Lokesh Manik from Vallum Capital. Please go ahead.
Yeah, hi, good afternoon. Very happy to ask. First question was on...
Sorry to interrupt, Mr. Lokesh. Yeah. Could you come a bit close to your handset?
Yeah, is it better now?
Yes, sir.
Yeah. My first question was on the interest expense. By when do we expect it to taper off? It's been on an increasing trend for a while now. So any strategy on that front, either in terms of new product introduction to pass on the cost to the customer? Just some light on that.
No, as you know that part of interest related to the profits is already in capital work in progress, and it is going to be get capitalized, number one. Number two is that when the new two facilities are going to be onboarded maybe in the fourth quarter, that's where actually the interest element is also going to be reduced further, because volume of the business is going to be increased further, and you will not see the impact of interest element when the higher the volume of the operations.
Understood. My second question was on the blend. As per my last understanding, it was at around 250. We had a portfolio of 250 blends. So has that increased over the years, in the last few years?
So, actually not 250. If you were to look at our library, we are probably close to 1,000 blends, yeah. But this is all because every time a new customer would come to us, we would end up developing a new blend for him, because everybody wants a new blend or a new type of coffee to be launched. Nobody wants to do a 100% Me Too product. So that's the reason, and sometimes we also, we keep doing our R&D depending on the on where the coffee prices are more competitive or which is more advantageous to us. We also end up doing a lot of R&D to make sure that a same output could be delivered with different types of coffee as input, yeah. So that makes, and therefore we end up in a situation where we probably having so many blends. So every time a new customer comes, it's an ongoing process. We keep doing this all the time for both the reasons. So it's an ongoing process, and we keep developing new blends all the time.
Okay. So last is not a question, just an update. If you can throw some light on the smaller pilot projects, like the F&B side, or the 2-in-1 in Europe, or the cold brew in US. So, or any other project that I'm missing out on. Where are we at? What stage are we, and how are we scaling? These 3-4 areas, if you can throw some light on, it'll be great.
Okay. So let me start with the UK acquisitions. Per call, it's been, we just completed most of our transition 3-4 months ago, wherein we took over from the previous company, Lockberg. Mm-hmm. So, acquisitions do take a lot of time and energy in terms of various kinds of transition, whether it is compliance or statutory or ownership, and therefore thereafter listing in the various modern retail and all that. So all that we have completed, and the good news is that we have started slowly relisting many of the chains in UK where we had lost out in the last few years. So that's a process that is going on. We are now looking to drive more and more sales there. We have started doing some ATL activities there. Last month we did some outdoor visibility for call in UK. So the brand building also has started there. So that looks well and on track on what we had planned to do with per call. And once we stabilize in UK, and we believe that the growth momentum is back, we will see how we can expand it to other geographies in and around UK as well. So that's a little update on per call. As far as cold brew and all that is concerned, we continue to do good business there. The volumes are increasing there, so that is there. We're also developing other blends for other people. A lot of work keeps happening. So these are some of the other smaller initiatives that we have taken, and that's a little update on that side.
Yes, F&B, if you can just throw some light on F&B. That'll be domestic or exports?
No, you're talking about F&B as in the plant?
Plant-based, yeah.
Yeah, so we only have launched it in Indian market. Again, that category, if you see, is in very nascent stages. Most of the guys have been trying to figure out what is the right mix that will help elevate that category, because this is a very new concept, especially in a country like India. So we continue to do a little business there. We are also targeting a lot of HoReCa segment, because that food first establishes itself a lot outside home. before. You have seen how Chinese food or even for that matter in developing economies, even coffee, the trend is that first it happens outside home and then it comes inside home. So we are targeting a lot of hotels. We have done a lot of deals, but even in those hotels, it remains to be a niche segment. We are also expanding our portfolio. That how can we infuse protein in day-to-day snacks? So that's something that we are working on. Hopefully, we'll be out with a lot new variants going forward. So that's the update on F&B. Once we have got some volumes going for us, then we will see if we want to enter into some of the other markets abroad. But right now, our focus will be India only.
Great. That's it from my side. Thank you so much, Praveen and team.
Thank you.
Thank you. The next question is from the line of Akhil Parekh from B&K Securities. Please go ahead.
Hi. Thanks for the opportunity and congratulations on a very strong set of numbers. My question on the domestic business and the branded business, have we taken price cuts in the last couple of weeks? Because if I recollect, sometime around September, we had hiked the prices by 20-odd%. But now, at least on Amazon, I see the products prices have been slashed back to previous levels.
So sorry, I didn't get the second half. The first half I'll try and answer, Akhil, is that no, we haven't taken any price cuts. In fact, there has been more price increases than price cuts. Yes, there are certain SKUs where price increases are a little difficult, like the price point SKUs of 5 rupee, 10 rupee, 2 rupee. So that's something that we cannot take price increases on. And I didn't get the second part of your question.
Yeah, so this is regarding a 200 gram fats which we get on Amazon, that where the prices had increased from 360 to some 440 rupees. But now if I look at it, it has gone back from 450 to 360 rupees.
No, so what happens is that there are times when you run, especially during festive times and all that, no, there will be a very heightened level of promotions that need to be run on these channels. And you know how competitive these channels are. Sometimes a lot of, during especially festive times, Diwali time and Dussehra time, you know, these channels, Flipkart, Amazon, most of them drive a lot of festive sales through deep discounts. So we also end up doing it. But it's not price cuts. These are, a few days during festive times, you'll see certain price cuts that is happening. But there has been, MRP increases all the time because of the coffee prices.
Okay. And just a clarification of the domestic business sales which you highlighted in the opening remarks. If you can please reiterate like how much we did in first half and how much we did in second quarter, and same for the branded sales.
So, like for example, second quarter we did around 105 crores of business in domestic, out of which 70 crores would be pure branded business, which means in the first half we have closed around 135, 140 crores of branded business and 200 crores of the domestic sales. And for the year, we are looking to, for the branded business, close to 300 crores. We'll see how this quarter and next quarter goes, because the first half momentum was pretty good. We are almost like 50% growth over last year. So that's a good set of numbers that we got, and we are continuing to build the brand from various angles in the domestic market.
And sure. And how are we doing in terms of the retail touch points? If I recollect, we have reached around 1.5 lakh touch points. What is the target for say next 1 2 years?
Retail, what is the outlets? Okay.
Outlets.
Yeah. So we are right now, directly by this end of this year, we probably will be, this is only general trade, we will be directly servicing around 1,30,000 or so number of outlets. You add another 5,000-6,000 of modern trade. And then, of course, there are these other things like we target, like the tea shops and all that, which we take it as a separate segment. So that will be another 3,000-4,000 touch points. And then, of course, there are other platforms like the quick commerce and the modern e-commerce and all that. So, yes, that's the number in terms of our distribution. We are looking forward to drive deeper distribution in South, because now in the cities we are doing pretty well. Now we need to drive into other tier 2 and tier 3 towns. So that's the task and challenge that we have taken. And in the non-south, we are now continuing to drive a lot of our distribution in the main cities. But we are keeping it restricted because that's something that we will not be able to do a very widespread distribution. There the depth of distribution will matter for us because again those towns coffee consumption is also concentrated and a lot of consumption is now happening through quick commerce and e-commerce. So that's something that we'll keep focusing on.
Okay. Great. That's all from my side and best wishes for coming.
Thank you. Thank you.
Thank you. The next question is from the line of Akansha Gupta from Solidarity Investment Managers. Please go ahead.
Hi, am I audible?
Yeah, you are.
Yeah, so in the last couple of con calls, we have always maintained that our EBITDA growth will be largely driven by the volume growth and there won't be much margin improvement on that front.
Right.
So how do I look at the EBITDA growth of this quarter of 25% odd? Because this contains some volume growth and some margin expansion as well. So,
Right.
yeah. So is it because of high value contracts in this particular quarter and you expect it to normalize over the year? Or is it that we are seeing some growth in the EBITDA per kg as well structurally?
Right.
So yeah, could you just throw some color on that how should we look at the EBITDA per kg and the margin expansion over here?
Okay. So Akansha, what we do is when we give guidance, generally these are long-term guidances. There will be certain fluctuations in quarters, each quarter. So let me clarify 2-3 things. One is, first and foremost, is that, yes, considering that the market has become very competitive, considering the various, supply challenges that has creeped in, and that's what I explained in my few answers before. Because of that, we ended up doing more value contracts and better value contracts, more brand owners and all that. So that has helped us. There is also a element of, ROD TEP, which is approximately 5 to 6 crores of ROD TEP, which is a substitution of MEIS that we used to get. So if you see, if I combine all of them, volume growth, better value contracts, more brand owners coming in, and this ROD ETP, all of that put together has helped us improve our margin this quarter.
And do you think over the year it will normalize to the 110 EBITDA per kg levels, or would this be a good base going forward as well?
No, so Akansha, I told you that like last time also, and most of our con calls we say that because it also depends on many things. It's just not one angle. The other thing that it depends on is the mix of our products. So considering that there could be more. So suppose, let's say, I start doing a lot more volume going forward, and I start getting into long-term contracts, which I spoke about, and these are spray dried and all that. Then what will happen is that my margins will slightly come down. So it may not be at the levels that it is today. And that's the reason we had always on a long-term guided that probably for 2 years, when we spoke last time, that for next 1.5, 2 years, we are looking at a similar margin profiles. I don't want to kind of, preempt and say that it will be better, although we are trying all the time to better our margins every day, because not only through, better contracts, more high-value products, more small packs, premiumization of coffee, building some efficiencies in our operations. So all that work is always happening. But sometimes it's very difficult because the mixes could change. I could be doing more of spray dried. That could at an overall level bring down my, EBITDA per kilo. And that's the reason we have given this guidance that it will be more or less stable for the next 1 to 2 years. And thereafter, probably when we are utilizing our current, expanded capacity to almost 50-60% levels, that's the time when we start building more efficiencies and getting into more high value contract, because these will stabilize and then I will get better margins.
Okay, understood. Just wanted to confirm that. Thank you.
Yeah.
Thank you. The next question is from the line of Ashish Upganlawar from InvestQ PMS. Please go ahead.
Yes, thank you so much. So most of the questions and answers have already been given. So, sir, on the raw material scenario, what basically I understand is that the crop has not been good in Brazil, Vietnam this year also, and prices probably. Would you say that those have peaked now? I mean, or is there any other disruption that that is there, or maybe some other event that one needs to track around there?
So my sense is that it has peaked. It has softened a little bit in the last month or so, and it should stay at these levels. Is my personal sense. Yeah, we will keep getting these news that things are not good. There's climate issues and all that. But largely, I have a feeling that they should stay at this level, and I'm looking forward to certain stability after may not be price reduction, but at least stability creeping in after December.
Okay. And but that doesn't maybe solve the issues on the working capital that we have with the elevated coffee prices. Maybe helps the P&L as such in terms of profit growth somewhere. So is there any other lever? Because I think in the initial part of the call you said that some value addition has helped in terms of per kg realization of the EBITDA for us. Are there any other mitigation measures to elevate the profitability so that the ROCs actually improve? Because working capital, it all depends on coffee prices actually.
Yeah. So we are actually working on a lot of fronts, just not higher value contracts as I told, but also other things like can I do more small packs? Can I do more? Can I build more efficiencies in operations and things like that? But considering that the coffee prices are going to remain at this level, there is not much change that I'm foreseeing in the near future as far as working capital is concerned. But the good part is that, and which is what we have always maintained, that all our working capital is for contracted business. These are not for inventory building. So I only buy coffee if I have contracted a business or finalized a business. So that is why we're not overly worried. Yes, the things will look much better if the coffee prices were to soften.
Okay. And what the maybe percentage of softening you would have seen in terms of price drop lately? Is it material or is it small?
We don't see much of a drop. See, actually what happens if you see long-term cycles of supply chain of coffee, the two big segments, which is the South American and the Southeast Asian segments, both of them, in years when they get good crops, then we see that there will be a softening of prices. But as long as one of them keep reporting, climate vagaries and therefore short supplies, the prices tend to be on a higher side. Having said so, coffee is also one crop. Unlike most of the other commodities where the harvest cycles are low, most of the agri commodities you will see 6 months to 9 months of agri cycle. Coffee has 3 to 4 years, because once you sow a coffee plant, it starts flowering after 3 to 4 years. So it seems that, and we have seen 2 years of price hikes. We have got certain reports that there has been acreage increase and all that in certain parts of Brazil and Vietnam. And therefore what happens is that post 3 years again you will start seeing some more supplies, and therefore things will start softening up. And that's the reason I really don't want to comment on any short-term or mid-term prices. I don't see it softening very much. Yes, couple of $100 here or there could be the variation. In the long term, yes, because of these changes, we would expect that there will be a certain amount of softening. But again, nothing to comment and can't be definitive about it.
All right. Thank you so much, sir.
Thank you. The next question is from the line of Deepak from Sundaram Mutual Fund. Please go ahead.
Yeah, thank you. So my first question is regarding the capacity. So you earlier pointed out that the Indian capacity is going through some trial runs. I just wanted to understand the 16,000 ton capacity and the new freeze-dried capacity of Vietnam. In which quarter do we plan to kind of commercialize it? And once we commercialize it, how much time does it take for us to achieve peak utilization level?
So, Vietnam freeze-dried will be next quarter only. Because trials take a lot of time. There are certifications, trials, matching of blend, all that thing happens. So the business starts coming in subsequent quarter only. And generally our capacity utilization plan is that at least for the freeze-dried, because we have good orders and all that, first year could be anywhere around. Generally, first year our thumb rule is 30%, 30 to 35%, but we could be looking at 40 or 45% in the first year of the freeze-dried capacity. Coming back to India, the India plant should start operations maybe a month from now, because all that trial and all that, most of it is now over. The certifications are also on their way, and as soon as they come this quarter onwards, we'll start seeing by the end of this quarter utilization start happening. And again, the thumb rule will be 30, 60, 80. So that's the thumb rule for 3 years that we build around. Generally, you will get a peak capacity of 85 to 90 against a rated capacity because of the blend and the changes and the CIPs that you do.
The utilization level you're talking about, it will be similar for both freeze-dried as well as spray-dried, right? At 85%.
Yeah. At maximum is what I'm saying. Yeah.
Okay. And sir, second question would be more related to bookkeeping. So when I was looking at your other expenses, in Q4 it was around 150 crore. Now since 2 quarters it is in sequentially declining. Right now it is at 116 crore. And the primary, it was driven by your standalone business, right? The Indian business. So I just want to understand, do we expect this number to go down, or was Q4 an aberration and now it is more at a normalized level?
So, okay, some of it is the other expenses if you see. A little bit of it is because of forex differences with the currency fluctuation. So there